Welcome to Leaders in Lending. I'm your host, Jeff Keltner. This week's episode features my conversation with Kyle Hauptman, the Vice Chair of the NCUA. We got to combine two of my favorite topics, regulatory oversight and innovation. So we talk a little bit about innovation in the sector for credit unions in particular, how they can work with regulators, how regulators are supporting innovation. And then we dove into specifically innovations around blockchain and AI. I really enjoyed this conversation because it combines two things I think are really interesting and very timely for how all of our institutions are trying to figure out how to navigate the world of new technologies and working with their regulators to do so. So I think it's a really useful conversation, and I hope you enjoy it. So please enjoy this conversation with Kyle Hauptman. Kyle, thanks for making time to join us on the podcast today. I really appreciate it.
Appreciate the invite.
So I'm looking forward to this conversation. I always like talking about regulation and innovation, and those two of my favorite topics. And when you smash them together, it gets me really excited. But I like to start off every conversation asking people, like, how did you get into the industry? Because I guess you typically make the joke, like, nobody really grows up dreaming of being a banker or a regulator. So what was your path that led you to where you're at today?
Yeah, it was a winding path, Jeff. I'm a kind of a career switcher, and anybody out there, it can happen, but it's hard to do a 180 degree. I wouldn't say that. I'd say it was like a 90 degree pivot. So I'm a financial regulator right now, right? And I worked in the financial industry before, so it's a switch. Politics was always my first love. Even as a weird geeky child, I got in trouble for sneaking into the den after bedtime to watch. I remember it was a Democratic convention back then. I know that's weird. I was like 11 years old or something. And then my undergrad degree was politics. Went into Wall Street. 2011, I was in Tokyo. I was first out there with Lehman Brothers. I was with them when they collapsed, and then got another job in Tokyo. And then in 2011, I did my career switch, you could say, to policy and politics. I moved to Boston to work for Mitt Romney's presidential campaign, and spent over a year there. Really enjoyed it. Obviously, he won the primary, which he had lost in 2008, right? So I didn't know how long I was even going to be. He lost to McCain in 2008. So this could have been a 3-month experiment. Who knows? Anyway, got the nomination. Obviously, Barack Obama was reelected president, but I'd enjoyed my year in change in policy and politics. It was one of those things where following your passion actually worked. Sometimes it doesn't. And then I decided to move to D.C., where I'd never lived, down from Boston. I'd met a lot of people over the campaign. And instead of coming down to D.C. as a triumphant member of the incoming Romney administration, I was just an unemployed guy looking for work. Got this little basement apartment and looking for work. Wound up working for Senator Tom Cotton from Arkansas. Worked for a great think tank, AEI, a free market think tank, and was fortunate enough in 2020 to be nominated by President Trump. And luckily, enough senators voted for me during the Senate confirmation process. And I'm here, and I've got a couple years left on my term. It was a little bit of a winding road. This is my sixth big city I've lived in, but.
Which sixth big city? Which do you have a favorite among them? I know you got to say DC. Live in DC because otherwise people get angry with you. But outside of DC, what's been your favorite spot?
Well, by the way, step back a second. For those of us who moved here for work, it's common knowledge. You're kind of supposed to diss DC like the swamp. Especially if you're an elected member, because who elected you? The people of DC? No, it was the people of Arkansas or California or whatever. But so I lived in Boston, New York City for 6 years, Los Angeles for 9, DC for 10 now. I was in Tokyo, Japan for 5 years, and Sydney, Australia for 1. I would say Tokyo of those, first of all, it's just a great city, but also because, as an American, as a Westerner, to me, that was the most interesting. That was the most different. It was a absolutely terrific time in my life.
Love it. I'm planning a trip with my family to Tokyo and Japan more broadly in the next year or so. So we're starting to work through our itinerary. It is a beautiful place, and those cultures that are so different do give you the chance to step back and think of things from a different perspective, kind of get a different view of the world, which I think is really good for you to see things from a different point of view.
Neat. It's just such a polite, orderly society. And Tokyo is this giant city, right? I mean, it makes DC look like a small town. But what's neat is it's just so safe and polite. You have everything in a big city, a million restaurants, you got nightclubs, you got, anything you want to do in a city. There's multiple baseball. I recommend a baseball game for there during the season. But you can walk home at night at 3:00 in the morning, drop your wallet on the street, and go get it the next day. I mean, it's kind of neat to have that. As you probably already know it, Tokyo and DC have identical climates. Hot, sticky summer, a winter that's kind of mild, snows.
It's a winter, but it's not terrible. Yeah.
Yeah, and they're the same latitude, east facing of a continent, and the cherry trees, are a big thing in DC. Cherry blossoms, those were obviously a gift from
Gift,
Japan.
and
And
yeah,
one of the reasons they were a gift from Japan is our two capitals, Tokyo and DC, have the same climate, so the cherry trees can grow.
can
Um,
blossom and really thrive there.
yes, they would not have given the cherry trees as a gift to the King of Sweden. They would not have given it to the Prime Minister of Jamaica, right? Because the cherry
Not have
trees can't grow,
thrived,
right?
and now they're famous in DC.
That's right.
Excellent. Well, I want to dive into the topic of kind of innovation today, and then a little bit on how you as a regulator support that. But I first want to kind of start with what's your perspective on the need for credit unions to innovate, and is that where do you sit on the kind of like don't fix what ain't broken, and like we really have to think about the future is coming fast and how do we adapt to it? What's your perspective on where credit unions need to be in that on that spectrum?
I'm of the view that innovation is necessary, always was, is now, and always will be. That it's innovate or die. That said, the core of it, what these institutions do, has not changed literally for centuries. They help people with their financial management. Money goes in, money goes out. You lend it, they make payments. So that core of it hasn't changed in that sense.
Yep.
But they've always innovated. They were there early with ATMs, way back in the day, and network with each other, credit unions, for that matter, and banks. And it's all very different, and it always has been. We could not have even had this. We're doing this on video right now, teams. We couldn't have done this 20 years ago, So they have to innovate. And I tell you this, as a regulator, it is hard because of the way bureaucracies are to develop a tolerance for some failure. Because experimenting, right? The word experiment means you don't know what the outcome is.
Yep.
And it's not really the fault of the agency so much, it's just the nature of it, where examiners and their supervisors and stuff, they get heat when something bad happens. They say, oh, what happened at Silicon Valley Bank? Wait, who's their examiner? Oh, that Jeff Keltner guy. But meanwhile, when they innovate and it goes well, you don't get a bonus or anything, really. So it's kind of downside focus. So we have to say, listen, just give me new technologies. I know you and I might want to talk about digital assets. People ask me, I've had a journalist kind of well known in the financial world. I said, you worry you're going to let credit unions use, blockchain, digital assets? You worried there'll be problems? And I'm like, am I worried there'll be problems? I know there's going to be problems. Every new technology does, right? And I always say, you guys know this, Jeff, that there were 0 plane crashes before we had planes.
So I think I could have pieced that one together.
No, thousands of years. Literally, there was 0. You never had a computer virus before you had a computer. So there's always no problems. It's always 2 steps forward, 1 step back. But yes, they definitely have to innovate. And as a regulator, we have to have some tolerance for failure, because that's the only way for long-term success, and not try to prescribe it. We don't want to say this vendor, this partner, this fintech firm. They come to me all the time and show me their fintech, and I say, all right, that's cool. But we don't have a white list, of vendors. And I think that would be dangerous to do so, So anyway, that was a long answer to your question, but there you go.
I want to ask 2 follow-ups to that, because I think there's 2 kinds of like fear of failure that happen in the institutions. One is to just like many financial institutions are conservative by nature and tend to have the same thing you're talking about. The regulators, they have a kind of lots of people who can say no, few people who can say yes, a kind of institutional inertia to them in terms of making decisions about trying something new. So I'm curious about putting the regulator aside, and that'll be my second question. But first, do you have advice on how you as an institution go, hey, we're going to start fostering, supporting more of this? Because, I feel like it's unnatural for many financial credit unions, maybe a little less so than some of the larger banks I've seen that are really have a lot of bureaucracy that's kind of tends to be stasis, status quo oriented. But what's your advice on how you as an institution develop the muscle for trying new things, experimenting, and being tolerant of failure?
First of all, I like that, how you put that. I'm going to try to remember to use that, meaning what you said about there's institutions that are set up that there's a lot of people who are allowed to say no and not many people who are allowed to say yes. I like how you put that. I hadn't thought of it that way. One thing I always say is, and it's not always applicable, but is fail small if you can. I mean, it always depends on what you're trying to do. have a $5 failure, don't have a $5 million failure. Have, just your career is not going to go south because you tried something and it didn't work. Maybe you wasted some time. Maybe you wasted some money. Your career is going to go south when you tank the entire thing.
Yeah.
When you have a failure. So again, it's not applicable all the time, but test something. Try a little transaction. Right? Just test. Try to minimize your failures. I mean, it's an obvious point, but before you're, as my old boss would say, he's from the Army, he'd say, before you're playing with live rounds, try to fail small if you're going to fail.
I like that because it's something I think a lot of institutions, a lot of people forget, which is they want risk management to be like a black, white, yes, no, hey, this is good, this is bad. And sometimes you say, well, we're going to manage the risk by saying it's a little bit of gray. We're not sure what'll happen, but we're going to put it in a small scale. So our risk management isn't that we've prevented any possible issues. It's that we've limited the scope of where the issues can impact, and we can learn from that. And then if it goes well, then we can expand. And that idea of managing risk, not by eliminating the possibility of risk, but managing the scope of impact in the case that something goes wrong, I think is a really interesting approach that is often people just want to we've totally locked this thing down. You go, well, in innovation, you can't always do that, but you can't limit the scope of what you're taking on as kind of the unknown.
Yeah, it comes up a lot in government and regulation. Some countries, some states within the U.S. have done a good job with, they call them sandboxes, regulatory sandboxes. As long as you stay within these parameters, which basically are all about that. Do not blow up the world, okay? But you can try something new. You can try something that isn't explicitly authorized, right? As long as whatever the problem is doesn't bring down the institution. And NCUA, just to back up and say, we are the insurer for America's almost 5,000 credit unions and the regulator for about 2/3 of them. The rest are state charters. But anyway, what we care about, we're like every other insurer in the world. We care about having to write a check, having to write a claim. Like every insurer, you like taking in premiums and you don't like writing big checks out. That's how every insurer is. So the main thing is, don't make us have to write a big check. Do whatever you want, but don't, at the end of the day, that's what matters. But on cost benefit, you have, and I say this all the time at my agency, you have to realize not innovating is a risk. Once you realize that staying still, that you will hit an iceberg eventually. So once you know that not changing is the riskiest, it can change your cost benefit, I think, in a positive way.
It's kind of a freeing mindset too, to get out of the zero risk, zero issue mindset into the how do I manage it? And I think it can be a relief when you can actually convince yourself to go that way.
Yeah, you try 10 things, one goes wrong. Wait, 9 went right?
Yeah.
All right, that's pretty good.
Let me ask you the follow-up to that, which is how do you think about how a financial institution should approach their regulator in the context of innovation? Because I've seen in the number of institutions I've worked with, credit unions and banks, very different approaches from kind of we get everything totally finalized and don't tell the regulator until it's out the door to I'm going to call them and tell them what I'm thinking and see what their perspective is. What's your model for effective engagement with the regulator by a financial institution on the topic of new, different, innovative programs, maybe using some of these new technologies we'll get into in a minute? Are you engage early and often? Or are you a kind of button it up? How do you like to engage with your financial institutions on this kind of stuff?
All right. So, I always tell people you can go to me. And listen, if anybody in the credit union world is listening, Hauptman at NCUA.gov. You can email me, okay? But that's only worthwhile for the next couple of years. But, I have to find a new job at some point. But listen, the world is never going to be the way I want it to be, where you can have free-flowing back and forth. As long as there's someone who's your regulator, who can shut you down, who's giving you grades, in the credit union and banking world, we give a report card, 1 through 5. 1 is good, 5 is bad. As long as there's somebody with government power, it's never going to be free-flowing. And I know some regulators think, oh, we have great leadership. I assure you, they're not speaking to you the same way, right? It's like speaking to a police officer. At the end of the day, they have a badge and a gun, and you don't. So I want to promote I'm proud of a couple of achievements. We now have Uber-style feedback. Quick 5 questions. After the survey. And I'll give credit to the Biden White House for the regular agencies that are not independent. He's also required all of them to have like 1 through 5 stars for regular government services. Does not apply to financial agencies because we're independent. We don't fall under the executive branch precisely. But like if you're a veteran, you go to VA hospital, how was your care? And it's especially important for monopolies. But in terms of communication, we have like 5 questions. I make sure the last one will, the 6th question is open and says, what other questions should be on the survey? That helps with communication. Because the questions you're asking signal, right? I always show people the photos of your Uber and Lyft. And right at the top, when you do your stars, both of them ask right away, they have cleanliness up at top. One of them calls it cleanliness. You can click on that. And then clean car, the other one says, what does that mean? Both the driver and the passenger every single time are being asked about cleanliness. That is Uber and Lyft communicating, signaling that that's important. That little piece of real estate. So we've done that, and I think that also shows we want your feedback. A lot of agencies only had an ombudsman line, somebody like a complaint line. That's all they had. And I was like, you guys, if you're signaling you don't care that much, because it's really easy these days to do, Uber and Lyft, DoorDash. Hell, you can't even order another pizza before you rate the last guy. So anyway, I'm going off topic. My point about communication has been important to me. Some transparency, normal private sector transparency. We've brought that to the agency, so I think that matters. It signals that you should be a little more comfortable calling me because we care. We're signaling it after every exam. Yeah. Also, recording, at least for the 2/3 of the credit unions that are federal charters, we're encouraging recording of the exit interview. You have an exam, it's a couple weeks, the examiner's going to leave, they give you your grade to the board of directors to record that just because it's useful information, So anyway, on the topic of communication, you can tell I'm passionate about it. It drove me crazy when I dealt with regulators in my prior life. But because no matter what we do, there's that differential, as you're talking to a cop, even if it's just on the street, you don't speak to him like your friend at the bar,
Yeah.
This is why trade groups are useful, because we don't regulate them. They can put their head above the tree line. The trade group, a vendor, I'm using the term vendor, but fintech partners, we're not their regulator, we're not their insurer. So the credit unions usually don't come to us and say, this really cool fintech talked to us. We're wondering if we can do it. Are we going to get in trouble? Is that all right? They are afraid to say that, right? Because what's the one thing they know? They know that if you might deem it risky.
Yeah.
So have other people who we don't regulate and insure, if possible. Credit unions usually have a state league or a combination of states. There's like a New England one. There's a DC, Virginia, DC, Maryland one. Have them. That's what they're for. Have them put their head above the tree line. Or the national groups, or have the fintech vendor, or hell, their venture capital firm that invested them. Have them talk to us if you, credit union person, don't want to put your head above the tree line. Because it happens all the time. You have somebody call you, a salesperson, hey, we want to work with you, credit union. We want to partner with you. We want you to buy our product. And people say, I'd love to, but, the government, man, the regulator, those guys. Sometimes that's just an excuse to get the salesperson off the phone. That happens. But sometimes it's legit, So that's what I would say. Number one, we want to be communicative. We're trying to be more responsive. We made legitimate strides on that, recording and those Uber-style feedback emails. But also, if you're concerned about it, or you say, hey, 100 credit unions want to try this fintech partnership, why should I be the one who puts my hand up and brings it up, right? Have someone else make the call, have the conversation, have the meeting. Your fintech firm, they have a financial interest in doing this, have your league organization, have your trade group. That's what they're for.
All right, I want to dive into a couple of the actual technologies here. And there were 2 that came up when you and I spoke earlier. The first is one that I feel like has gone out of fashion. So I'm curious to get your perspective on it, which is digital assets. Because I feel like, the interest in digital assets and blockchain technology seems to swing with the price of Bitcoin. And the price of Bitcoin has been up and down and all over. And not that that's a good metric, but how do you think about, is that going to be a valuable technology? Was it a flash in the pan? What do you think the future is on the front of digital assets and blockchain?
Yeah, it's funny you ask that. Behind me here, I have CNBC on, without the sound, and something's changed that I think probably will be with us, which is, down the bottom of the corner, they have the stock indexes, Dow Jones, S&P.
Yeah.
Part of their thing is they have the Bitcoin price, right? And they'll even switch. They have Ether, I don't know if that's going away anytime soon, but I hear you on that, on the interest bubble. listen, it's the gold rush stage. We've seen all this before, Jeff. There's a gold rush stage where someone thinks there's a pile of money and people rush in, dreamers, thinkers, and you get overvalued assets sometimes, and you get bubbles, and you get bad business models that we only find out when there's a crash, and you get some flat out scammers and con artists. Anytime there's a bunch of money, people think. We saw all of this 25 years ago with the internet bubble, right? A lot of people first heard the term .com not from using any product, but from the investment world. Oh, this IPO tripled. People are making money, ads for
Yeah.
Ameritrade, hey, make a bunch of money. I remember those ads that, some kid has a yacht, and then remember it all crashed. And then tons of people lost money and tons of empty office space in Silicon Valley. But that was the investment bubble side of it, and you hit right on it. The price of Bitcoin, okay, put that aside. When the internet crashed and all those things lost money, some of them were bad companies. There were also scams. And some of those models were before their time. But put all that aside. When the NASDAQ crashed in 2000, was that a fad? Well, hold on. The investment bubble, that happens. This new thing called the World Wide Web, that was not a fad. That has changed all of our lives. We couldn't even be doing this interview right now. So once you shift away all the debris and you have a helpful bear market, because that's what cleans out a lot of problems. It also cleans out scams and con artists. Remember, Madoff was only found out because of the financial crisis, right? He could have kept on going. Bear markets are useful. They clear the brush out, So yes, I think when it's all said and done, there'll be concrete, actual uses, right? We're already seeing it with instant payments around the world, different currencies. Stable coins, very useful. We're seeing disasters happen and people can send money instantly for people to use. You don't have to run it through bureaucratic charities. I've seen people do interesting stuff on identification. It reduces fraud, trying to figure out who somebody is. It can also help people who are kind of marginalized, like prisoners get out. They don't have a valid ID. They can't get going with their life to get a job until they have ID. I find that a little weird, Jeff, and I think you too, because if there's anyone whose identity the government should absolutely be sure of, it's the guy they locked up for the last 20 years, right? Meanwhile, they walk out with no ID. So it's fraud reduction, it's access to services, and it's quicker onboarding, that sort of thing. That's a concrete use of blockchain technology. Obviously, blockchain being the underlying technology behind Bitcoin. And we've seen a few of these things, and just tokenized assets, right? Again, like you said, a lot of things on people buying this coin or that coin and making money. What about regular assets we already have, various loans, et cetera, that are just tokenized? They're just easier to distribute and own a piece of, right? Things that were very hard to break into pieces before. So tokenized assets. And I bet it's just like the internet in 1999, where it's a whole world of things that I can't think of right now. Remember how the internet started, and all it was literally the web, meaning it was a web page. And you typed in an address, and you went to it, and you saw a page, and you went to another one. Well, that later became apps that were only possible because of like GPS. Half the apps I use wouldn't be possible without, if I didn't have a mapping app, It's not necessarily going to a web page. We're using the internet all the time in lots of things. So anyway, my point is I'm just trying to be humble and try to say, well, there's this use case and that use case. Yeah, I can think of some, and I've seen some. But my guess is it'll be something very different, than the ones I can think of right now. Put it that way. But genuine uses, put aside the bubble. We've seen this before, and it's kind of good we had crypto winter. It cleans out a lot of bad actors.
Yeah, we've seen it. We're going to get to watch a few of the bad actors get cleaned out here over the next couple of months, I think, in a dramatic. Let's talk about one other technology area that I think is pretty interesting, obviously near and dear to my heart, which is AI. I feel like that's one that's maybe a little farther along the hype cycle, or at least we're seeing more concrete use cases in many ways, like live today in production, often behind the scenes. But what's your take on where we're at in the evolution of AI and the adoption of that in different areas within the credit union?
Well, if I use the internet as the analogy for digital assets, in the sense that there was a hype and a bubble, but at the end of the day, there were very good uses. The AI one is comparable to the internet in the sense that normal, regular people can see cool uses in front of them. A lot of cool things you don't necessarily see. So, like, for example, let's go back to blockchain for a second. Title. If you ever bought real estate in this country, you know how creaky our sort of title insurance, making sure that the house I bought from Jeff was actually Jeff's to sell me. Well, people may benefit when that title is transferred digitally as an NFT. You, the mortgagee buying a new home, you don't even know that it happened. The title went from the seller to your lender. You benefited perhaps in lower title insurance in the process. You don't even realize you did, right? There's a lot of things we benefit from we don't see. AI, anybody on their phone or computer, or even just viewing it. Hell, I keep seeing Instagram posts from cool AI generated art. I didn't even have to use it myself. I could already see it without touching AI. So in that sense, people can see it and learn it the way that, the first time you got on the internet, you're like, man, this is cool. I can read the newspaper from another city, you know. AI, you can do it, and it's neat. And I think concrete uses, call centers. We got people calling in many, many languages, just the United States.
Yeah.
And it's hard to hire customer service people who are fluent in English and the Ethiopian language, like we have here in DC, or Ukrainian. So there's neat uses. Politically, the one you hear about here in DC is lending. Is it going to be fair? Is it going to discriminate? And people think that humans can be discriminatory lending it, and then when you make a machine that's just supposed to analyze it rationally, maybe that does too. I don't know, but that's the one you hear about. I think it's going to change a lot of things. Lending decisions for sure. We have, the FICO world, may decrease in value in terms of its importance. It may be a variable because you can analyze so many other things, and fraud detection.
Yeah, fraud's a big one because it's really interesting to me that a lot of people think of AI in terms of the large language models, the chat GPT, kind of conversing with a model in some way. But in many ways, the lending and fraud detection problems are like the perfect problems for the algorithmic side of AI, because it's like, what do you need? You need a lot of data, you need a lot of examples. You're trying to make a prediction about something that doesn't happen that often. Hey, yeah, like loans we got tons of data. We got lots of history on who's paid back and not, and we can make really smart decisions. And it turns out there's quite a bit of inefficiency in the space. And the same thing is true of fraud. Lots of data points, very difficult to analyze as a human, thousands of pieces of information about how this individual acted, but yet at the same time, very clear signals when you can piece them together. So I think it'll be fascinating.
Fraudsters, the ones who are, good at fraud, they know how the current system works, and they know how to game it and work around it. The whole point of AI is that which the human mind does not necessarily see the problem up front. Really, the majority of credit unions the last 2 years that have gone down in America that we've had to take over were because of fraud. Now, that's partially because we've had pretty good economic times with low delinquencies and everything. So we're not having a lot of credit unions collapse because of standard economic reasons. But I think 4 out of 7 last year were fraud. So that's one neat thing. And there's do you know Joanne Barefoot?
I do know Joanne.
Okay. I was on her podcast. I think all 3 NCUA board members, myself, Todd Harper, and Rodney Hood, have been on it. She did one a couple months ago. Do you know who her podcast guest was?
I'm going to guess. Yeah, that makes sense given the conversation. That's fascinating. I need to go listen to that because I'm very curious how ChatGPT.
Now, it wasn't even like a smart AI. The voice sounded like Siri. Like you could kind of tell it was a computer. So what she said, I think she called it dumb AI, meaning it wasn't trying to it sounds like talking to Siri on your phone. But, they had an in-depth conversation on American financial regulatory policy. I just yesterday at a conference I just got home from in New Orleans, I saw on the screen interview Joe Rogan and Steve Jobs. Steve Jobs died several years before Joe Rogan ever had a podcast. And check it out. It wasn't Joe Rogan talking to a AI Steve Jobs. Neither Joe Rogan or Steve Jobs had anything to do with this. Both were AI, both in their own voices. You and I could sit in the car, drive for 20 minutes, listen to this podcast, and think it was those two. Or if you knew Steve Jobs died a while back, you'd say, oh, I guess Joe Rogan got an AI Steve Jobs. But it's not. They're both entirely AI with their sensibilities, with their accents, with their voice, saying the stuff they would say. Absolutely fascinating. So we talk about fraud detection. If somebody can call up and sound like me and look like me on a video or whatever, all technology will be used by a scammer. All technology has helped to fight scams, right? So that'll happen both ways. Anyway, I'm babbling a little bit, man, but I just think AI is super cool. I think trying to fight it is the wrong way to go. Yeah.
Yeah. I mean, I think it is interesting that we see this real push against AI because of the potential downsides or maluses, right? And politics is a huge area where you can start to make it look like somebody said something that they didn't say, and it can be very, very convincing.
You received a fundraising call, and it wasn't
Yeah,
them,
it
which
wasn't.
made the media. Listen, you should be scared of the problems? Oh, you bet. Remember what I said about no plane crashes for your planes? But they're going to be here anyway, so I assure you.
Well,
So
every
you're not going to lose
technology
your
in
job to
history has
AI.
had those. Yeah, that's
Yeah.
right. Like from fire on, there has been the possibility for good and ill uses of every technology that's ever been developed by
Yeah,
humankind.
and all just like digital assets, I think America choice. You're going to get the downsides in the long run anyway. Do you want to at
Mm,
least get all the upsides? And America won the internet so well. And I'm a Republican, but I was praised Clinton Gore administration put out early guidance 1997 for the internet.
yeah,
And we got all the negative. Everybody else, all the video jobs, video rental jobs are gone. The travel agents, we got all the downside. Print media, we lost all those jobs like everybody else. But we also got the most upside. The
yeah,
Blockbuster Video is gone, but we got the headquarters for Hulu and Netflix, and the investors that got in and made money, and the people had life changing. Well, we got all the upside. AI, we're going to get the downside, right? We can try to stop it in this country, even if we succeeded in slowing down AI. Well, the rest of the world is not going to. So our history in this country has always been embracing the upside, knowing full well we're going to get the downside anyway. But man, it is neat stuff.
yeah. I feel like AI is a very difficult topic to talk about in too much depth on a podcast because whatever you say is going to be. I feel like right now you're going to be out of date in a week or two anyway because the
Also,
capabilities
hey,
are so fast.
you
It's
know,
pretty crazy.
maybe I'm not really Kyle Hauptman. Maybe you're not really Jeff.
Oh, don't tell my wife. All right, Kyle, I got three questions I like to end the podcast with that I kind of ask all my guests. So I'd love to ask them of you now. And the first one is, what's the best piece of career advice you've ever gotten?
I'd say one practical one is great. The
I love
faster you
practical.
reply to the faster you reply to an email, typically the less you have to say.
Oh, interesting. Tell me more about that.
The longer you let it sit, the more of like a longer answer. Or if it's on a whole bunch of people and you chime in first, you can say the most basic, simple thing, get it out of the way. The sixth person to reply has got to be a little more, value added. The quicker you reply, the less you have to say. And I'll just do one more, which is broader, which is just one word: people. A fabulously successful guy when I was working at Lehman in Australia. He's actually a Vietnamese immigrant to Australia, did incredibly well. And he said it's people. There's a lot of things, but it's people. People, people, people. You learn skills. You get this. You have that. You get degrees. Someday you might not get a job and you don't even realize it. Someone didn't like you, right?
Mm,
Be well liked. And in this town in particular, in DC, an astonishing number of decisions are made by people in their 20s. You go to Capitol Hill, there's a lot of white-haired senators being walked around by 26-year-olds, and so even though I'm sort of, call it mid-career now, I always made a point when I would get these, real polite LinkedIn messages. Dear Mr. Hauptman, I see you work in the Senate Banking Committee. Can I speak with you? 3 years later, that person could be in charge of presidential personnel office.
yeah.
So people. I don't want to sound too Machiavellian about it, but it's just a better life when you want to be respectful, honest. When I worked on the Hill, I was routinely asked to leak information, and I put the short term gain out of pleasing whoever that was, a journalist, a lobbyist, whoever, for my long term reputation. But people
Yeah.
below you, people above you, people next to you. Being well liked and respected, stop right there. You're ahead of a lot of people, and it's just very important. And it's going to come around in ways that will blow you away.
Yeah, there's a concept I've heard from a few people now called the infinite game. This kind of idea that if you can think of things as transactional, a one-time game, but really the game is infinite because those same parties that you interact with, your leaguing example is a perfect example. Like, yeah, that maybe it's a short-term win for you in a certain way, but like in the infinite game, in the long-term game where you're playing, where you're interacting with all of these people on both sides multiple times, you got to think of it in those contexts. And in that context, understanding people, being respected by people, doing right by people, it pays dividends well into the future. It is a very valuable asset, even if it's not always the most immediately expedient.
That's easier, man. Not being nervous about walking in. Oh, I wonder if that guy's going to be there. We don't like each other. It's just And again, I tend to view things through a political lens because that's my life now. But being able to work across the aisle, and we're in a system, a two-party system, where it's designed for opposition, right? You're not supposed to agree because that's how you were sorted in the first place.
Yep.
So getting along well, and I'm proud of the fact that when I went through as one of the last Trump nominees, even after the election was over, President Biden was coming in. One of the reasons I got some votes from the Democratic senators was because of their staffers in particular said, "No, Kyle, I work that guy. Listen, I know he's a Republican. He's different. Always honest. Always answered the phone. Could always talk to him. He did what he said he was going to do, and I'm very proud of that. And it's just flat out a more effective way to be. But again, I'm aware that I tend to now think partisan politics. That's the world I'm in. But
it's all encompassing. So my second question for you is, what's the best advice you have about the financial services industry? For someone in the space, like what's one thing they should keep in mind about succeeding in the industry?
Let's say you're a young person starting out. Right now, if you knew the first 3 pages of a book about AI and knew how to use a couple of these tools, and man, there's so many now. There's the artwork ones. You're going to look impressive because older people who got success in a different world hear all this stuff. You can't not hear about Bitcoin. You can't not hear about AI.
Yeah.
Have you ever traveled with somebody or been in a restaurant where someone speaks a little bit of the language you don't?
Yeah.
And I remember when I first got to Japan, one guy knew how to order some food, and to me it's just like a magic trick. Whoa, why? Because he knew 20 words more than I did. If you're that person who seems to know what's up when it comes to cryptocurrency or blockchain, you don't need to know a ton. You're the person who knows how to say 10 phrases in French, and when you're in France with your friend who doesn't speak anything, you're the guy. You're the person.
Yeah.
So, and it doesn't take a whole lot of knowledge to be known as someone who knows. I've already seen it on the Hill. People have now carved out careers for themselves by learning about digital assets. Like there's a whole lot of people that know it matters, and they hear about it, and they know it should matter to them. And there's a smaller number of people, that have at least sort of done the 101 understanding. So that's what I would say to a young person. For right now, play around with AI, know some stuff, know some terms. And then for that matter, digital assets. The older people know it's important, but don't necessarily really know how to use it. They're not confident. You can go far being somebody with a little knowledge about something new.
All right, that's great advice. And my last question for you: what's one bold prediction for the future?
I can do a cheesy one. Change. I really want to say that my New England Patriots will go back to the Super Bowl, but I don't know. I don't know about that, but I think that, again, I tend to think of things politically. Some of our problems will be solved in ways that are not dealt with in the current arguments about the problem. Okay. It sounds weird now, but 2004, 2005, the U.S. government trying to block a merger between Netflix and Blockbuster Video and Hollywood Video because they were going to have too much market power, and there was already concerns about how much they were charging. There was also a massive class action lawsuit, and 26 attorneys general were in it, about how Blockbuster did their late fees, how they computed them, they were ripping people off and everything. And you can have regulators get in and how you do lead fees, and they had a settlement. You know what solved that problem? Netflix. That's what solved the problem. Right? So the framing of, we need more competition in the video rental space, and we shouldn't allow this merger, and arguing about they're going to use market power and pricing, and the arguments about the late fees. And this is just one example of many. It wasn't solved in that paradigm. It was solved by a whole new thing blowing it away. And it was irrelevant. Try to speak to a 10-year-old today and explain it, returning a movie late. How do you return a movie to Netflix? How does that even make sense? How do you rewind it? The terms don't even make sense. So I think a lot of our discussions, they're going to be solved in ways that are not necessarily part of the certain argument. And we might look back at ourselves and say, man, that was a lot of energy expended. When if we had just let human ingenuity run free, not that we'll solve problems, but we're going to solve them in ways that are not necessarily debated right now, So that was a very unspecific, broad one, but that's one.
It's very broad, but I love it. The idea that the answer to a lot of our problems is in a totally different framing, and you don't always see it coming. You don't always see it coming. I think that's a great way to end it. Kyle, thanks again for making the time today. This was a great conversation. I appreciate you joining me.
Hope to be back sometime again.